Welcome to the Financial Compass e-learning series. This session will give an overview of the changes made in Compass to accommodate the regulatory capital requirements under Basel III. Our session today will focus on three types of changes made in Compass that incorporate the Basel III capital changes. First, reports. There are changes to existing reports as well as a brand new report. Second, new accounts in Compass. We've pushed out new accounts and categories that give you the ability to customize them. And finally, risk weightings. We've added features that allow you to easily customize risk weightings. This session gives a high-level overview. For more information, there's an additional e-learning recording that shows how-to, going through a detailed example of how to make various Basel III adjustments in Compass. The link to the other session is available in the client area of PlanSmith's website or by email request to support@plansmith.com. In addition, PlanSmith's Advisory Services has produced a two-session webinar on capital management. The presentations recorded on December 11th and December 16th, 2014 are available on the Internet. You can call us or email us for more details. Information on Basel III changes can also be found in an FDI webinar called Regulatory Capital Interim Final Rule that was updated in June of 2014. You can access this as well as the complete regulation through the link shown on the screen. You can also get this link by emailing support@plansmith.com. So let's take a look at the specific changes in Compass. We'll start with reports. Two existing reports have been changed and a new report has been added. We've changed ratios at the bottom of the income statement report, and the capital adequacy report has also been updated. We've added a new report called Capital Ratios that lets you see the details behind the calculations, both for history and projected periods. Here's what the changes look like. On the income statement, if you include ratios, you'll notice changes in the selected ratios section near the bottom. This area will also show the capital conservation buffer. The capital adequacy report has been expanded to include any adjustment accounts that you create, as well as the new and revised ratios. And finally, there's a new report called Capital Ratios. That report lists out the accounts used in calculating the ratios, which are at the bottom of the screen in the report. Page 2 of the report shows details behind how the new capital conservation buffer is calculated and how it's phased in over time. With the latest update, additional categories and accounts are automatically added to your Compass chart. Within these new folders, you have the ability to add even more accounts to track data that is not readily available via your GL or other downloads. The new categories and accounts are automatically added to the bottom of the off-balance sheet section. The gray folders and blue accounts are automatically loaded into your plan, so there's no need for you to do anything. The ratios in the reports that we just reviewed are all based on the gray folders in this area. And the blue folder accounts are not edited or changed by the user, they're all calculated automatically by Compass. However, if you want to make adjustments to these categories, you can add additional accounts within the gray folders. We'll provide more detail on that after we look at the individual accounts. It's important to note that the adjustment accounts are optional and not required. Now again, the capital ratios in all of the reports will be based on the totals in the gray folders. These include the calculated blue accounts as well as any adjustment accounts that you may choose to add. This slide summarizes those ratio calculations for you. Now before we walk through adding adjustment accounts, let's take a little closer look at how the blue folder accounts are calculated. The first blue folder account is quarterly average assets. It is the simple average of the selected month average balance and the 2 months average balance prior to the selected month. The next calculated account is risk-weighted assets. It is the sum of the end-of-month balance for each individual asset account in Compass multiplied by the risk weight for that account. So if you change any end-of-month asset balance or if you change any risk weight, the amount of the risk-weighted assets is going to change automatically. Reviewing the capital adequacy report will show you the details behind how this number is calculated. Next, the Common Equity Tier 1 Base account contains a number of different components. The highlighted accounts are automatically included in the CET1 calculation. Specifically, Common Equity Tier 1 Base includes common equity, surplus, undivided profits, current earnings, dividends, and goodwill is subtracted. Now, if your bank decides not to opt out in their AOCI election next year, the unrealized gain or loss on securities account, not the category but the account, can be set with the account wizard to be included in CET1. Additionally, accounts that fall within the folders highlighted on your screens can be customized by the account wizard, and you can include them in CET1 or Tier 2 or exclude them from capital altogether, whatever is appropriate. The next two automatically calculated accounts are under the Tier 2 category. They are Tier 2 Base and Limited ALLL. The Tier 2 Base is the total of all the accounts in the capital section of the balance sheet that have a capital class property set to Tier 2. Now, unless your bank has certain types of preferred stock, subordinated debt, or relatively rare types of minority interest in other financial institutions, you may not have any balance in this category. The last automatically calculated account in this section is Limited ALLL. This account is the smaller of either the loan loss reserve or allowance for loan loss, or 1.25% of the total risk-weighted assets category. Now, the final section of the new Compass chart is the non-performing assets section. Compass does not automatically calculate these balances or include them in any standard reports, but the information is available to you for custom reports or ratios that are created in Compass, as well as in the Compass Excel add-in. So here's a summary of the new automatic Compass accounts and how they work. We recommend that you check each account in the capital section to make sure that the capital class code you currently have assigned to each account is correct for the category. Next, let's talk about the custom accounts that I briefly mentioned when we were looking at the capital ratios report. The accounts highlighted in orange have been manually added to capture adjustments needed for actual or forecast purposes in the ratios. Clients updating to the current version of Compass are not required to add any accounts or make any changes. However, the reports and capital ratios will all be calculated automatically whether or not adjustment accounts are present. Now, there are two main reasons, though, why banks may want to add these custom accounts. First, you may want to add accounts to make minor adjustments so that numbers tie out exactly to your call report. And secondly, you may want to add accounts to capture details that are not recorded in your general ledger or in Compass. Creating an adjustment account is easy. Just right-click the category that you want to adjust. Then select New Account. The new account wizard for this type of account has just one step, entering the name. Now, if you need to make adjustments in the historic or actual data, you click Update Financial button in Compass and select the month that you want to adjust. The adjustment account you just created will appear in the supplemental data area on the right-hand side of the screen. Now, if you need to adjust the projected or budget balances, click the Projections button and then go to the account name to get to the Edit screen. Notice that the area also shows you balances in the 4 folders for the calculated accounts, but you can't edit those balances. Remember to calculate the plan before reviewing or printing any reports. Let's talk about the last item on our agenda today, additional features now available to customize risk weights. Your Compass plan already contains risk weights for all the asset categories. However, Basel III changed risk weights on certain balance sheet and off-balance sheet exposures. Some of them exceed 100%, and some of them may be different than before. It also imposes some new categories of risk rates that may end up being mixed with other risk rates in your categories. And this mix, of course, could change over time as part of the category with the special risk weight grows or shrinks as a percentage of the whole category. So there are 3 different ways to input any new Basel III risk weights that are needed for your bank. First, you can enter a custom risk weight for any account just using the account wizard. Or you can use an adjustment account under the total risk-weighted assets category to make an adjustment in the off-balance sheet area. Third, you can use the account wizard and then set up a custom by month risk weight. Let's take a look at how you do that. If you had a category that has a risk rate that changes over time, simply go to the account wizard and select custom by month. Then select a rate other than 0. Any rate, doesn't matter which one as long as it's not 0. When you do that, a new tab will be created, allowing you to input risk weights by month. Well, as a best practice, we recommend that you review the capital adequacy report periodically and make adjustments to the account settings as needed. To recap our session, we focused on 3 types of changes made in Compass to incorporate Basel III capital rules. First, the reports. Again, changes to existing reports as well as a brand new report. Second, in new accounts, we've pushed out a new section of accounts that give you the ability to customize and capture information as you need it. And finally, in risk weightings, we've added features that allow you to easily customize risk weightings and make them flexible by month as well. Additional sources of information are listed on the current screen and are also available at our website or by emailing support@plansmith.com. There's an additional e-learning recording that shows how to, going through a detailed example of how to make various Basel III adjustments in Compass. The link to the other session is available in the client area of Plansmith's website or by email request to support@plansmith.com. And remember that Plansmith offers advisory services if you need professional help in updating your bank's capital policy or advice on capital stress testing or other asset and liability issues. We're confident that Compass gives you everything you need to help manage your bank's capital in compliance with Basel III. Please give us a call if you have questions or suggestions. You can reach Compass support at 800-323-3281 or email support@plansmith.com. Thanks for taking the time to view the presentation and for being a Plansmith client.